Meta Platforms reported another strong quarter after the stock market closed on Wednesday. Q3 revenues rose 20% in constant currency, accompanied by an even bigger surge in both earnings and free cash flow. Investors were still not impressed, however, judging by the 3% price drop post-market. Could this be because of the phase of Meta's Elliott wave cycle? Over 5 months ago, in mid-May, while the stock was at $475, we wrote that the time to take your Meta profits and run is near. After examining its daily chart from an Elliott wave perspective, we thought that the stock should make a new all-time high in the vicinity of $600 a share soon. Once there, however, the 5-wave impulse from the 2022 bottom would be complete, and, according to the theory, a notable correction should follow. The sharp recovery from $88 a share looked like an incomplete impulse pattern, marked 1, 2, 3, 4, 5 in brackets. The 5 subwaves of waves 1 and 3 were also visible, but its 5th and final wave was still missing. Therefore, it made sense to expect more upside in wave 5 towards $600 before the bears show up. The following updated chart shows how the situation unfolded. The first thing to notice is that wave 4 wasn't over yet. It evolved into an A, B, C, D, E triangle correction, which delayed the 5th wave rally until after July. It didn't cancel it, though, and Meta stock finally reached the $600 mark earlier this month. The other highlight of this chart is that wave 5 in brackets can also be seen as an impulse pattern labeled 1, 2, 3, 4, 5, that perhaps we would see one last push higher in wave 5 of $5 to $620. Instead of chasing it, however, we think investors should view it as a last chance to evacuate. A notable 3-wave correction can be expected to drag the stock price down to $400 or lower in the months ahead. If this count is correct, the time to take your Meta profits and run has arrived.